for us, what we've seen is real strong performance across all of the portfolios. And it's a result of a combination of factors. First of all, there's better news emerging about the trends, the infection trends, and the slowing down of the death rate across what have been the main centres of the infection globally. Also, you've got the coordinated approach of central banks coming in and providing a stimulus. Now, we've spoken in the past about money being in flight, and I think it still is in flight. It hasn't found its way yet into the pockets of businesses and workers. But what it has done is it's created, I think, a floor in the equity markets, a point at which things can bounce. And we've got some interesting stats coming through. You know, we can see that technically we're back in bull market territory, and this has happened relatively quickly, very quickly, in fact, across the US market. We can see that in the S&P 500. You know, just last night, again, it was up 3%. That's 10% in the week. The FTSE was up 4.5% yesterday. Euro stocks up by 5%. And this is based on the factor that I said before about the slowing down of infections. Now, we're not out of it yet by any stretch of the imagination, but there's signs of positivity pulling through. The results in the portfolios, we've seen the balanced, which is the one that the majority of clients sit in, that's up by 3.4%. That's on yesterday's prices. Before we've seen the market effect pull through. The portfolio that has most equity content, which is the aggressive portfolio, is up over 5% in the week. So we're seeing this coming through, Dan. And there's a couple of other interesting things going on. You know, one of the big stocks in the FTSE 100 that was hit was Carnival Cruise. You know, it was absolutely decimated for reasons that everybody understands. And then the Saudis came in the week with their sovereign wealth fund. The share price of Carnival went up by 25% in a day. You're also hearing signs coming out of China that they're looking to expand into Europe. They're looking to buy into European companies, which will help share prices. The other side of this is that in Japan, you know, about 2.2 billion of their, in dollar terms, of their economic stimulus is earmarked on bringing production out of China back into Japan. So there's lots of things going on in the market, and we've seen a more normalized approach this week, where, you know, typically when equity markets go up, bond markets go down. That hasn't been happening for a couple of weeks. It has this week, and you're seeing signs again of, in the US, new bonds being purchased, new bonds being issued in the corporate sector. So there's lots of different things coming through, and they're adding up to good returns from markets.
That's good to hear, Mark. I think because if you were to read the newspapers or scroll for the news online, you wouldn't be told that markets have been up the last 2 weeks in a row, really, now. So it's been